Okay, exam revision lecture number 6. First of all, I just wanted to clarify again with 8-mark questions. If you get a question that asks you how demand policies are promoting jobs and growth with reference to the last two budgets, so 17-18, it's really important that you don't do certain things. So I'm going to start off with a few don'ts when you get these questions. Number one don't is don't talk about any supply side policies. Nobody cares about supply side links if it's a demand management policy. You're not getting any marks for it. Option 2, do not spend too much time talking about an individual policy. Okay, keep your answers flowing in terms of a range of different policies when you're doing these questions. And number 3, if you just focus on discretionary policies, you're not answering the question in its entirety. So in terms of the 17-18 and 18-19 budget, a good way to start about how aggregate demand policies are promoting jobs and growth is to focus on the stance of the budget and use some keywords and link some keywords from the budget papers. So what I mean by that is, the best way to start these questions is to say that this year's budget and even last year's budget have both had a mildly contractionary nature in that the size of the budget deficit has decreased. However, most of this has been due to cyclical factors as growth continues to pick up, unemployment falls, there's stronger overseas growth, etc. And then focus on what the current objective of the budget is. So the current focus of the budget is to try and maximise investment while also living within our means. So we want to create an environment that's conducive to investment, but with doing that without trying to jeopardise this objective of fiscal consolidation. So if you can use that language before you start talking about the actual deliberate policies, that will set your answer on track for answering this question in detail and not just focusing on the deliberate stuff. So mention automatic stabilisers deficit to decrease. Mention the fact that we're focusing on investment while still maintaining living between our means, and that most of the discretionary policies are relatively expansionary. In terms of, after you do that, you talk about, as I said, the smaller deficit and explain why. Then you go into a little bit of detail about some policies. So that's saying that, you can mention them all together. So the government has been committed to strong jobs and growth. This has been shown through lower income taxes, maybe in brackets increasing the 32.5% tax bracket to 90,000. This in accordance with lower company tax rates, accelerated depreciation allowances, and continued spending on infrastructure have all helped to boost aggregate demand. So we're not going into detail about any of them. We're giving a bit of a description so that someone reading this gets an overall view of, okay, that's what the budget has done this year. You're not just giving them just infrastructure questions. You're not just talking about discretionary policies. You're giving them a broad view of what this budget's all about. Then you focus on the stance of monetary policy. Okay, we should all know what that is by now. We focus on the transmission mechanisms. Explain two of them separately. Don't get sort of muddled up doing one and then sort of explaining two together. Do two separately. And then, it's about how they've worked to promote jobs and growth. So you could say something about the limited effectiveness given the fact that people are deleveraging and banks aren't passing on the cuts and things like that. So that's how you approach that question. It's very broad. You don't go too specific, but you pay due focus on the stance of the budget, the size of the deficit, and what's going on in the economy. And the same thing with this 10-mark question that you got in the CPAP exam. Okay, you explain what the business cycle is for 2 marks. So it's the regulations of demand and supply. The regulations or the fluctuations in economic activity. It has peaks and troughs. Explain some of the features of those peaks and troughs. And then you get into what both of the budgetary and monetary are doing. And again, with budgetary policy, don't just focus on deliberate policies. Explain that when we're in a trough, the government is likely to be running a deficit, okay, because injections are likely to be outweighing leakages, and that's because the economy has high levels of unemployment and slow growth, and that's likely to help automatically to try and increase the trough, to try and get the economy out of a trough. So before you get onto the deliberate stuff, explain what happens automatically to get us out of the trough, because that's what the question's asking you. And then you go into the deliberate stuff, and that you keep that brief. They can lower income taxes, they can cut company taxes, they can spend money on infrastructure, give cash handouts, and then link that to the fact that there'd be less leakages and more injections into the economy, which would help to stimulate that circular flow. But when you're doing these questions, the biggest mistake I'm seeing with all the ones that I'm marking is there's not enough attention to the stance of budget and the fact that automatically we run a budget deficit, and explaining how that automatically helps to pick us up with the economy. With monetary policy, again, you go through the stance and then you link it to some channels. Obviously, you wouldn't get this question and the last question on the same exam. And through those channels, you can talk about the exchange rate channel that boosts exports, reduces imports, so injections increase relative to leakages. Again, the cost of credit channel leads to savings and investment, call it savings and investment, leads to less savings and more investment spending because there's a lower return on savings and a better return on, cheaper to invest. So again, really focusing on this idea of, has my answer actually focused on what budgetary policy will do automatically? And for the first question, have I focused enough on the stance? Other advice, whenever you get a question about how the RBA is likely to respond to something, so for example, if inflation's really low, it's not just a matter of they're likely to respond to increased inflation. Talk about how they have other goals they want to achieve as well. So they want to achieve strong and sustainable growth. They want to achieve full employment. So when they're doing that, when you're talking about the RBA being, the inflation rate being below 2%, and remember we want that on average. So if on average it's below 2%, so look at the chart, if it's mainly below 2%, we're still not achieving the goal, then they will be focusing on their other goals of strong and sustainable growth and employment, as well as getting inflation back to the target range. But don't ignore the other focuses on the other parts of the charter. Secondly, and this is different, completely different, when you're evaluating supply-side policies, my suggestion for your evaluation of supply-side policies is, and I was talking about this with someone today, it's good if you can talk about two things that are relevant to each other. So if you're looking at the strengths and weaknesses, for example, of supply-side policies, you could base your answer around infrastructure spending. So the benefits are that it can target all the goals simultaneously. So infrastructure helps to boost our productive capacity. It helps to reduce inflation because there's better productivity, can create jobs both in the short and the long term because we're more internationally competitive, and it boosts growth because there's more willingness to supply and increase international competitiveness. They can be your strengths, and then you can say, however, there are negatives with supply-side policies. They are not very effective at regulating the business cycle, and that's because they often face long implementation and impact lags. So again, with infrastructure spending, you can go through that process that takes a long time to get through Parliament because it can face objections in both the Senate and the House of Representatives, as well as lobby groups, and then it can also have a long impact lag because once it takes a long time to build and have its benefits for the supply side of the economy. So that's how you can evaluate supply-side policies using a common example of infrastructure throughout your whole response. Other tips, when you're doing questions on trade liberalisation and you're talking about in relation to inflation, you can talk about how there's more competition, which leads to us making us more productive and restructuring. In terms of other benefits for inflation, you've got to remember that any question related to the dollar going down or up, or any question related to anything that's going to cause input prices to change, talk about how that directly impacts the CPI. So what I mean by that is that when we lower tariffs on imports, we don't have to pay the tax anymore, and therefore directly things that we're buying, like cars or machinery, or not really machinery, cars or technological products, computers, fridges, whiteboards, whatever we're buying, it's cheaper directly because that's included in the CPI. So it doesn't have to just be through cost of production. If you get a question about how something impacts foreign debt, generally it's asking you to link it through the CAD, but it may be through the budget. So for example, if you get a question that asks you, I don't know, if it's something like, you see that there's really strong growth and it asks you how it might affect foreign debt, it could be a positive thing for reducing the budget, but it could also have negative implications because that's likely to lead to a bigger CAD. So that's really important to recognise. I'll talk about these other ones another time because I've actually got my old slides for it. Just in relation to subsidies, if you do get a question about subsidies on your exam, just define what they mean initially, and then you can talk about anything that they can be used for. So they help to lower firms' cost of production. They can be used for renewable energy, education, research and development. All those things would be relevant to a subsidy question that you could link it to. Relative prices. Okay, if you get a question on relative prices and resource allocation, as I said to a few people today at school, what I want you to do is actually think about how the change that has occurred is likely to impact the other market. So if you do what you call like a good or bad analysis, and what I mean by that is you need to think about, is this thing that's happening good or bad for the other market that's referenced in the question? If it's good, resources will flow to that industry, and if it's bad, resources will flow away from that industry. So here's an example. The carbon tax is removed. Okay, the carbon tax is removed. What impact will it have on the solar market? Again, this is about relative versus actual prices. So if the carbon tax is removed, the price of solar energy will actually increase because it's cheaper to use carbon energy. And then when you're looking at resource allocation, well, what's going to happen in the market for solar energy? If I was an owner of a solar company, is this good for me? And the answer is no, because less people are going to want to use solar if carbon electricity is cheaper. So in the market for solar electricity, even though it's got a higher relative price, what's going to happen now is that the demand's actually going to shift to the left because the substitute is cheaper. So that's actually going to lead to resources shifting out of the market, because the decrease in demand will lead to lower prices, and therefore lead to that being less profitable for producers to produce solar energy. So you've got to think about how it impacts the market, and that'll set the direction for whether resources will shift in or out of that market. Again, lower oil prices. If I own a gas company, is that good for me? No, because people are going to be filling their car up with petrol. So resources will flow away from the gas industry. It's got a higher relative price, but demand will shift to the left. If there's higher cost of production for Mars bars, that should be Coke. Mars bars and Pepsis are not related. If there's a higher cost of production for Coke, what will happen to the market for Pepsi? Well, that'll have a lower relative price, but if you look at the demand curve would shift to the right, because now the substitute's more expensive. Then the price will go up for Pepsi, so the relative price would go down, but the actual price would go up, and that would lead to more resources flowing into Pepsi. Okay, if we remove, another question from previous exams, if we remove tariffs on imported products, that will cause a higher relative price of our products, but it actually would cause competing Australian products to go down in price eventually. The increase in competition will force us to lower our prices as well. So lower tax on imports will also cause lower prices of domestic competing products. An excise tax on alcohol, if you get a relative price question, what will it do for soft drinks? Well, more people are going to drink soft drink. More expensive to drink alcohol, so demand will shift to the right for soft drink, more resources will flow into that industry, even though it's got a lower relative price. If there's a tax on soft drinks, then it's going to shift the demand curve for healthy drinks to the right, and that will lead to more people drinking healthy drinks. If you have to link these questions to efficiency, okay, think about the benefits for our living standards. Less people are drinking soft drink, the demand will go down when there's a tax on it, articulate that really clearly, and then we have less instances of obesity and diabetes and rotten teeth, etc., etc., and less healthcare provided for these people, and that's all going to promote efficiency. Last thing for this video, welfare and supply side questions. Okay, I keep honing in on this, but you're going to get questions that have to link things to aggregate supply. And most of it's repetitive, so it's important to really nail the structure to answering these questions. So first things first, if you get a question on welfare reforms, if you make it clear at the start of your answer what the intention behind these reforms are. So the idea would be to provide more incentive to get back to work by lowering the effective tax rates for workers and making it sort of more cost effective to get back to work. That's what they're all about. For all supply side questions, so if you get a question on subsidies or education or infrastructure or welfare reforms or tax reforms, whatever, there are clear things you can talk about every single time you get these questions. You need to think about, does it increase the quality or quantity of resources? Okay, if it's something like education, it's probably both of them because more people will be part of the workforce. Other things might be more related to quality. Link it to the 3 Ps. Again, education or immigration, you can link it to participation. You can link it to productivity improving. Okay, and they're both going to boost aggregate supply. Once you've done that, link it to cost of production. Okay, every supply side policy will have a benefit for cost of production. If it's lower company taxes, that will create investment spending and that will help to lower firms' cost of production. If it's immigration, we get access to new skills and productivity and wages reduced, that's good for lowering production costs. This one here is the key thing. If you don't have this in your answers, you will not score well. This is sort of the most important thing on this slide. Link it to firms' willingness to supply, okay, or ability. All of this stuff up here, lowering production costs, will make firms more willing to supply. If we've got increased quality and quantity of resources, we're more able to supply. Both of those things means that we're physically supplying more, which creates jobs and creates growth. The more that we supply, the more jobs that we create, and that reduces unemployment, and that creates more economic growth. Okay, that's the key thing. That's more important than linking it to international competitiveness. All supply-side policies increase firms' willingness to supply, which then creates more jobs and creates more growth. What you can also link it to is the lower prices, particularly for longer questions, help to make us more internationally competitive. That can lead to increased exports and less imports, which all has benefits for the economy as well. Last thing, when we're talking about inflation and you get asked to explain how it is measured, okay, basically go through the process. So the ABS measures inflation on a quarterly basis. I'm using the CPI. The CPI is measured by collecting prices of a basket of 100,000 goods and services that are purchased by the average households in 8 capital cities. These goods and services are weighted according to their relative importance to how much we spend on them each month. And then each quarter, the average cost of the basket is compared to a base period to determine how much inflation has gone up. So we look at the price changes of 100,000 goods and services every single quarter to measure our CPI figures. These goods are weighted according to how much we spend on each of them, and then these price changes are compared to what they were to a base period to get an index number, and then they compare it to a period, say 3 months ago, to determine whether they've gone up or down.